Markets are hugging the flat line this afternoon on a busy day of central bank activity, another soft jobs number, and more saber rattling on the Korean peninsula. This is the MacDesk Flow Report for Thursday, April 4th. I'm Rebecca Darst from the Market Access Center, bringing you the latest action in the major indices every week from the floor of the New York Stock Exchange. We are seeing a gain of just half a point in the S&P. That's a 5-point bump higher for the Dow Blue Chips. Although volume is coming in a little light today, there are a number of catalysts moving markets today, and traders are positioning for a big jobs number to finish the week tomorrow. Let's quickly recap the action on global indices overnight. Markets in China and Hong Kong were closed for a holiday, but there were major headlines on separate other fronts. The Bank of Japan left its benchmark rate unchanged, but announced an aggressive plan to buy 7.5 trillion yen in bonds every month and an ambitious 2-year inflation target. Governor Kuroda's move was much more boldly interventionist than market observers were expecting. The Japanese yen absolutely crumpled in response, down 3% in the pre-market to test levels not seen since the fall of 2011. Later during the U.S. pre-market, we also had the European Central Bank leaving its benchmark rate unchanged and in line with economists' expectations. But once again, it was the following press conference with ECB Chairman Mario Draghi that provided market cues. And Draghi did not disappoint this morning, offering reassurance that the ECB is prepared to maintain a loose monetary policy for as long as is needed and is prepared for further action. He also offered some remarks on the controversial Cyprus bailout and the so-called depositor haircut that has unsettled investors in recent weeks, saying the Cyprus bailout is no template and no turning point in Eurozone policy. This lent some support to the euro after early weakness following a string of lackluster regional services PMIs from around Europe. Elsewhere, geopolitical tensions continue to mount on the Korean peninsula with a new round of nuclear threats from North Korea, including the unsettling headline, "The moment of explosion is approaching fast." Investors seem less alarmed by these headlines, however, and the real weakness in the pre-market came after a worse than expected weekly jobless claims number. The street was looking for 353,000 new claims for the week ending March 30th. Instead, the number came in at 385,000, which was a 4-month high and the third consecutive week of gains, although there may be some seasonal distortion involved in that number. Bear in mind that we are trading ahead of a key jobs number to finish the week tomorrow, this being the March change in non-farm payrolls. Last month's NFP reading came in at 236,000 new jobs. Market consensus this time around is looking for 190,000. Now, after several days of trading interest in SPY weekly put options, these are bearish contracts on a number of disappointing jobs numbers, we've been seeing very balanced movement among put and call buyers in SPY today, with particular interest from buyers showing up in the April month calls. These are bullish contracts at strikes 157 and 158. This might point to some traders positioning for a less dire jobs read. So we'll continue to watch traders adding to positions ahead of that 8:30 a.m. number tomorrow morning. Taking a look at next week's market action, on Monday we've got Japan set to release March bankruptcy numbers and an economic watchers survey. Europe will release its Centix investor confidence reading for the month of April. Germany will release February industrial production. The UK will release some March retail sales and home prices data, and the Bank of Canada will release its Q1 Senior Loan Officer Survey and a Business Outlook Index. Here in the US, we're looking at Q1 earnings season, if you can believe it. Alcoa will kick things off on Monday after the bell. Tuesday brings March machine tool orders from Japan. We'll look at trade balance data from Germany, France, and the UK, along with a GDP estimate for Britain, and February industrial and manufacturing production numbers. Canada will release housing starts and building permits, while here in the US, we've got a March indicator of small business optimism and February job openings figures. Wednesday brings an overnight release of Japanese bank lending data, industrial and manufacturing production from France and Italy, while here in the US, we'll be looking at weekly MBA mortgage applications. Later in the day, the Fed will release minutes from the last FOMC meeting. Earnings are on tap from Family Dollar, Constellation Brands, and Bed Bath & Beyond. Thursday is a heavy day of Japanese data with March money supply numbers due out overnight, domestic corporate goods prices, Tokyo office vacancies, and February machine orders. Germany will release March CPI data. Canada's February new housing price index will be released. The US will release March import prices and weekly jobless claims, and we'll see earnings from Rite Aid, Progressive, and JB Hunt. Friday is a light day of global data releases with only Japan's February tertiary industry index and February industrial production from the Eurozone due out overnight. But it'll be a busy end to the week here in the US with March advanced retail sales, March PPI, February business inventories, and April University of Michigan's consumer confidence number. And we'll get our first peek at the Q1 performance of the big banks. JP Morgan and Wells Fargo will report their numbers before the bell. We'll be following all of the action from the Mac Desk right under the Bell podium, so be sure to check your inbox for the midday and check us out next week for the Mac Desk Floor Report.